Yeah, the real estate industry relies on predictability. So rising interest rates are not such a big issue as long as they're rising as predicted. That wasn't the case in 22.
Yeah.
They were rising really fast, and on top of that, the spreads were widening as well. So that came as a bit of a shock to the industry, and that's why transaction volumes declined massively. And we are currently in a price discovery phase, I would call it, and that's why everything is very muted.
That predictability is so interesting. I do wonder what the sense is looking ahead to 2023. I'm actually hosting a panel in Davos in a couple of days' time about the future of monetary policy. What is the sense from your clients? What are they expecting as far as interest rates are concerned? Are we there at the peak?
Well, you know, real estate people tend to be optimists, so some people hope that we are close to be there. But we have to watch. Inflationary pressure is still very high. We were celebrating that they were coming down from super high levels, but they are still on a non-sustainable level. So I think we will see slightly more moves from the central bank. And as long as we don't have clarity how far it will go, we will see real estate markets to be slightly muted. So we are hoping for the third and the fourth quarter 23.
Yeah, okay. So near term, pretty muted. Can I just ask you structurally what has happened to the leasing market? And I think, you know, over the course of the pandemic, there have been so many different shocks. But then, you know, WeWork is an example of a company that had locked in very long-term leases against very short-term tenants. There was a duration mismatch. Have people started to think about leasing and the duration of the leases on back of the shocks that we've seen the last couple of years?
Yes, we have had before already a trend that tenants are trying to sign up for shorter leases. Because it's very hard to predict how much space you need in 10 or 12 years from now. And that trend has been accelerated during the time of the pandemic. What we see in the leasing market is a complete bifurcation between the best buildings which are coming to the market, where we achieved new record high rents all around the globe, and those buildings which are dated and not meeting expectations of tenants, where it's very hard to find a tenant overall, and if so, at very low rates.
Yeah, so what happens to those outdated, older buildings where it's difficult to find tenants?
Well, many of them will be obsolete going forward, especially in those environments where you have a lot of dated office buildings. New York is a great example. And so we will see a lot of repurposing of those type of buildings.
Yeah.